Welcome back to Under the Lens. We still have with us our guest for the evening, Mr. Sanjeev Krishan, Executive Director with the global audit and consultancy firm, PricewaterhouseCoopers, looking after the private equity practice there. Before we resume our conversation with him, remember you also have your section 2 where you email your questions to underthelens@utvmoney.com, and both of us will try and field them. You know, before we went on to this break, you're telling me the IPO was the most preferred route. Now, the IPO markets being what they are, so that's a big risk, isn't it?
Yeah, sure. I mean, you know, as you were talking about, 2010 was a good year from an exit point of view on the IPO route. But then there are other routes. I mean, you could prepare a company for a strategic sale, particularly if the private equity guy is holding a very significant chunk of the equity. That's one of the preferred
But in
routes.
India, strategic sales, you know, change in managements have always been very tough, right? So it could be a private equity A selling to private equity B, you mean?
It could be that also. When I say strategic sale, I'm really looking at a strategic investor who's not a private equity fund and who actually has an interest in that business, really taking on that business. You very rightly mentioned, I mean, last year, for instance, we did see a bunch of transactions where one private equity fund sold their stake to another private equity fund. Now, typically, private equity funds, you know, do not like to buy from another private equity fund because
they don't see,
exactly.
maybe why is that guy selling?
Exactly, and giving one of their colleagues a significant amount of profits. So, you know, one guy has made a lot of money and I'm actually buying him at a significant premium. So, you know, at times that situation is there, but you know, at the end of the day, it's my thought process as to what this company can do from here onwards. I mean, if I can, if there is a theme that I could work on, maybe India's consumer growth or whatever else, it really depends on what the private equity believes is going to happen in that particular sector and, you know, the India growth story in general.
What's the return expectation of private equity people, typically when they go into an Indian investment?
Well, I mean, it would suffice to say that the return expectations in India would definitely be higher than what they have in the developed world. You know, there are obviously, you know, a certain amount of risk that they take by investing in any emerging market like India. So, you know, the expectations are also going to be higher. If you look at, for instance, I'll just give you one example. I mean, if you look at the Paras deal, in which Actis and Sequoia sold out to Reckitt, I mean, there the IRR was almost in excess of 40%. So,
okay, that type of return.
And that's maybe on the higher side of things, but you know, you would expect, you know, a fund, you won't blame a fund for expecting those kind of returns. Maybe.
Yeah, I think because I mean, the risk is also, the Indian stock market gives you 20%, you want much more than that because you're getting the unlisted stock at the time
absolutely.
when the cash flows are not very sure, and I mean, the attendant risks of private equity. What are the themes that are popular now? What are things that people are chasing now?
Well, at this point in time, I think anything which has to do with the Indian consumer story is really very popular. You know, anything which they believe would require a significant amount of investment over the next 3 to 4 years.
So infrastructure?
Yeah, absolutely. Infrastructure is one of them. Education is another one of them. And you know, people have to get educated. I mean, you know, people are, you know, you and I are very concerned about our children's education. So we are definitely going to allocate part of our money to it. Healthcare is another one. So you know, those are the themes that are working very well. And then on the services side, I would say, you know, on the consumer side, particularly food and beverage is one sector which is actually pretty hot on the private equity side. Even BFSI and technology sectors, I think those are sectors where one would tend to see a lot more investments in times to come. But infrastructure, education, healthcare, I think those three really will be the fulcrum.
Tough sectors, isn't it? I mean, some of them, the returns are quite tough to predict, right? Infrastructure, for example. In India, I mean, so many delays and all that. So that's real, you know, venture equity in a way. Tell me, what are the worries that people have when they invest into India? What are the major concerns right now?
Well, I think the biggest concern, apart from you know, what all of us understand already, I think is really in terms of what kind of company they're getting into in terms of governance. I think the governance issues are possibly the ones that trouble them the most. A lot of funds these days are very concerned about, let's say, compliances, FCPA compliances. Most of these funds now need to be compliant with FCPA. So all the investee companies also need to be compliant, which effectively means that they need to ensure that the systems in their investee companies are robust enough and governance standards are high. Now that's something that I think, to me, that's a single largest factor.
Corporate governance.
Yes.
What are they getting into?
Yes.
It's not the business model itself, but the way it's being done.
I'm saying that the business model is a given. I mean, that's a given, and I
unless it's there, you don't get into
absolutely,
it.
Absolutely. That's a given. I mean, and you might have a particular representation of it, and I might believe it differently. But I think the one issue, the one common theme, if there is one common theme, I would say it's the corporate governance, which
the Vodafone decision didn't bother them?
Well, I think if you look at some of the issues, really, I mean, from an exit point of view, I think that's clearly an issue that that bothers them. There is this, if you look at the regulatory landscape and the tax landscape, I think in terms of exits, the Hutch Vodafone story really has been a bit of a dampener. And I recently heard, stories about Indian companies being taxed when they go for global M&As, etc. So it's really a threat from.
It's becoming a contagion.
Exactly. So I think that's clearly an issue that bothers private equity funds, particularly when they're looking at exiting.
Most of them come through tax.
Most of them come through Mauritius and one of those places, or one of the other tax havens. So that's where they are. So that's one of the key issues. But yes, I mean, the tax and regulatory environment is clearly, could be more conducive. For instance, another issue which people tend to deal with is this whole issue about setting up whether they're setting up a permanent establishment in India. That's another big issue. And
that's again a tax issue.
That's again
permanent establishments are taxed. Is the DTC addressing all these things? Or not?
Well, not really. Some of the things are being addressed by the DTC, but not in their entirety. Okay. So that's a bit of an issue. And then if you look at the whole structuring for private equity funds, how do their people get taxed? I mean, for instance, the tax on carry which people have with the general partners. I mean, that's another issue that at times
taxes is a very big issue. Okay.
Yeah.
We'll go for a very short commercial break now, but friends, we'll be right back to take your questions. Last minute reminder, all you need to do if you want to ask any questions is to email it to us at underthelens@utvmoney.com.